All right, good morning and welcome back to the London session. It is 5 a.m. Eastern now, and let's get started off as price action begins to cut loose on the south side among risk assets. I think let's start with BTC, Bitcoin. All right, what we are seeing on the screen right now is, I think it's the wave structure is quite a bit encouraging in the Bitcoin. As last session, what we were discussing was the the drop from 85,300 something towards 81,300 was a combination. I mean, let me zoom in a bit. Yeah, so it was a combination W, X, and ABC Y. That is, it proved to be a corrective one. And what we are seeing right now is maybe price action is just beginning to cut loose on the north side. And if we go back to an hourly chart, uh, uh, we've got, let's zoom in again. We're just trying to find out if there is the initial impulse wave. Uh, See, this one is clear. That is 3 and A, B, C, D, E triangle and 5. So that is W. That sharp wave was X, and then again 3, 3 and 5. So WXY complete, and what about this rally then? It is maybe 1, 2, and then 1, 2, 3, 4, and 5. Maybe one more low and then one more high would complete the first impulse. We don't yet have the first impulse, but a slight dip and another high would complete the first impulse, giving us room or giving us a confirmation, sorry, not room, but a confirmation that bulls are back in control. All right, as those who are, I think we just bought around this price 83,100. So at this point in time, as we speak, we are at break even, and those who wanted to initiate fresh positions, ideally they must have done around the 81, 82,000 mark. If you haven't done so, you might want to take that uh, long call right now. Still there is room, and maybe you can place a tighter stop. If not 76, maybe you can place around 79, but it's ideal to place around 76, because if 76 breaks, then Bitcoin is going to go much lower, not 79. There could be an even complex corrective structure in the making, which could decline towards 79 mark, 79,000, and then resume its rally. So just to remain on the safer side, probably you might want to place your stop loss around the 76 and not 79. All right. So that was a quick update which I wanted to discuss before we started uh, euros and dollar index and pound. So the first one was Bitcoin, where in the portal we are already long from 83,000, stop 76, targeting at least 96. Looking at the daily chart, I mean, if prices kind of if there is a if 76 breaks, then prices can actually go and test those lows actually. 62s actually. It wants to confirm that a major top is in place. But if in case of a survival of 76,000 maybe, and if the first impulse is also in place, with wave 4 as a triangle and thrust wave 5, then a corrective wave is underway towards the 96,000 mark, right? So tell you what, we are dealing within a corrective rally, which is again an aggressive call. But looking at the risk reward ratio, it is worth taking the risk and let prices push through the 96,000 mark, and we will reverse from there. All right. So that's the trade plan in Bitcoin. We are keeping ourselves open with another option of a potential new high also in place, but as I said in the last session, the chances for that are quite less, and we would be absolutely content with the rally touching through the 96,000 mark. All right. Okay. Having said that, I would like to touch base with gold. For those who are just joining, I'd like to update the slightly larger negative wave count actually. Now this is playing out to be, we are primarily into the minor wave 5, and within minor wave 5, we are we've already completed wave 1, wave 2, wave 3, and wave 4, and we are now looking to complete wave 5 of minute degree. Before we do that, if we further look at the subdivisions, then we've got minute wave 1 complete, minute wave 2 complete, minute wave 3 complete, and now we should be looking towards minute wave 4, and ideally minute wave 4 would settle around, I need to adjust the wave counts right now. And look at that, 2983 is where prices are pointing towards a 38.2% retracement. We've got minute wave 1, 2, and 3 possibly now in place around, with that intraday high touching above 40, and the minute wave 4 should be underway towards 2983 now. All right, so just a moment, please. All right, that could be the first wave, and I don't think it should undergo as an impulse, because if it does drop as an impulse, then that move would be incomplete, and it would also suggest further declines. So I think the move might have started with prices dropping towards 3026 straight away from 3045, and now it's now looking towards 2980 at least. All right. So if you want to place yourselves, I mean we haven't initiated aggressive shot, but we would like to do that. Let me see, because but that would be too much of an aggression. All right. So got to be very careful in doing it. We are definitely counter trending. All right, and you don't want to be on the wrong side of the trade, especially when the underlying trend is absolutely higher. So After taking profits last short positions, we have refrained from taking further shorts, and we are sitting on the sidelines right now. But I would see if that unfolds into a five-wave drop, five-wave decline, and then a pullback rally before issuing a short in the portal. Alright, 2980 is where we are targeting, and the other strategy is to remain absolutely flat right now and wait for price action to drop towards 2980 and then initiate longs from that point onwards. Alright, so that is what the trading strategy looking like. At the moment, it's good to remain on the flat side, on the sidelines, please, for gold. All right. We will not have much length, lengthy discussions right now, but I think if you look at the Euro USD, that is also beginning to cut loose on the south side. Maybe not exactly through the potential wave 4 around the 2720s, but it is at least testing the 2900 handle. Even if it drops to 2810, that would be a nice little expanded flat wave 4 in the making, giving us room and confidence to go long thereafter. All right. So let's be a bit watchful. But the the thing I'm wanting to make here is the underlying trend remains absolutely on the bullish side, but it's good to remain on the on the sidelines for now if you're looking to initiate fresh long positions, and those fresh long positions would be somewhere around 1.8. I think 820 would be a good one to start initiating. Remember, we have already taken longs partially around 850. If you have taken profits, that's okay, but the next entry is around the same price, 825, or even possibly lower towards 725.50 range. All right. Okay, that's the story in the Euro USD. It's pullback time right now, and I don't know, but it's quite possible that the pullback may continue towards the 800 and potentially 725 zone. All right. This is one part. Let's move on to the dollar index. All right, next one. If you look at the dollar index, the price action is now pulling back nicely, but we need to see further pullbacks and possibly towards 104.90 or so, and that would be a range where we would be more inclined to go short. So, and remember, today is also FOMC late New York session, so we will anything we do right now might not have much weightage in terms of the entry orders. All right, so just wait around for a bit of while and uh, wait for price action to rally through the 104.90 zone before entering on the short side again. All right, so that's the story in the dollar index, and the stop loss would go around the 3rd of February, sorry, 28th of February high, and that would be close to 108. All right, and to be very precise, it would be 107.70. Okay, and I think it's a potential expanded flat in the making. So I think wave C, if it is the wave A of the expanded flat, wave B of the flat, then wave C should stretch further towards 104.20, possibly 104.90 as well. Right, so that's the story in the dollar index. Please refrain for selling right now, but watch out for this pullback rally to extend through the 104.90s before reversing. That would be a nice little area to go short again. But going short is absolutely valid at any point in time. The only thing is you've got to manage your risk and stop loss at around 104.70. All right. If I would want to go long, let's say what we did exactly in Bitcoin yesterday and also in the Dow Jones yesterday. I mean, even if we get entry at a bit early stage, it's okay. Till the time we are quite confident about the trend. So even if you sell around this price, it's all right. Just be prepared, please, to sell more around 104.90 and make sure that you place your stop loss around the right price as well. All right. So that's the story again. Going forward for the dollar index, we'll touch base for pound, and I think for the first time, pound is also showing a bit of weakness that was expected. So I think it's going to give us more opportunities going down in the New York session. You know what? Decline towards the 2800 levels would be an amazing potential buy entry, and from there on we would go and take it further towards the long side, potential target around 1.34. All right. We don't have much to discuss right now as far as the direction of the trades are concerned. Possibly when we come back in the New York session, we will have something more to tell in the part of a story. But the final instrument which we would like to emphasize here is the Dow Jones might be preparing to cut loose on the north side. It's a 38.2% touch. It might drop towards a 50% or even the 61.8% drop figure. But we've already entered longs yesterday uh, with a potential target of 42 and 43,000 going forward. All right. So these are the stories as we move into the London Times. We're keeping this session as a bit short and sweet. When we'll discuss in the more details when we come back during the New York Open. Until that time, once again, there is going to be some trigger today. So FOMC sometimes is a huge event. So got to be a bit watchful in entries, but the larger degree trends in euros and dollar index and pound are not changing at all. I think the only benefit that we might have in the FOMC event is that it might trigger the retracement of pullback which we were been looking for, and that would be good for us in fact, because it would give us a chance to re-enter towards the larger degree trends. All right, so see you back then during the New York live session 2, and until that time, once again, thank you for tuning in, and as always, please do take care and God bless. Goodbye.